Ladies and gentlemen, welcome to the Q4 and FY24 results conference call of GTPL Hathway Ltd, hosted by Emkay Global Financial Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pulkit Chawla from Emkay Global Financial Services. Thank you, and over to you, sir.
Thank you, Sagar. Good evening, everyone, and welcome to the Q4 FY24 earnings call for GTPL Hathway. We have with us today Mr. Anirudh Jadeja, Promoter and Managing Director, Mr. Piyush Pankaj, Business Head CATV and Chief Strategy Officer, and Mr. Saurabh Banerjee, Chief Financial Officer. Without any further delay, I shall now hand over the call to the management for the opening remarks. Over to you, sir.
Thank you, Pulkit. Good evening, everyone. A warm welcome to everybody to earnings call of GTPL Hathway to discuss the financial performance of Q4 and FY24. The company made progress in its subscriber base across both segments, achieving the 1 million subscriber milestone in broadband business and closing CATV at 9.5 million subscriber base this financial year. As the largest MSO, we look forward for consolidation of industry and retaining customer based on economy of scale and quality offerings. In the broadband side, the growing trend of digitalization, connectivity and larger data consumption will help drive wide broadband growth as India is still under-penetrated as compared to the global players. We are a company with consistent dividend paying history of those shareholders. For current financial year FY24, Board of Directors have recommended dividend of 40% as rupees 4 per share. I will now hand over to Mr. Piyush Pankaj, who will take you through the segmented KPI and overall business strategy.
Thank you, Mr. Jadeja. Good evening, everyone. First, let me share the usual KPIs for our cable TV and broadband business before delving into our strategy for both these segments. Our digital cable TV subscriber base as on 31st March 2024 stands at 9.5 million. Paying subscribers stand at 8.8 million. On a YOY basis, the increase in active and paying subscriber is 550K and 600K respectively. In the broadband business, as you are aware, we had crossed 1 million subscribers in Q3 FY24 and are ending the quarter and financial year 24 at 1.02 million. We thus have added 100K new subscribers, an increase of 11% on a YOY basis. Home pass stood at 5.80 million as on 31st March 2024, of which 75% are available for FTTX conversion. Home pass grew by 500K on a YOY basis. The broadband ARPU for Q4 and FY24 remained stable at Rs 460. The average data consumption per customer per month stood at 355 GB and 10% increase YOY. Our strategy for growth cable TV remains clear, and as previously shared with you all, we will continue to pursue both organic and inorganic opportunities for growth through penetration in existing markets, exploring new geographies, and acquiring smaller players respectively. In broadband segment, India has one of the lowest fixed broadband penetration. Jan 2024 wired broadband subscribers stood at 38.9 million. With 325 million households in India, current subscribers represents 12% penetration, which is far lower than penetration in developed nations of the world. The overarching strategy involves convergence of both cable TV and broadband services to provide holistic bundles to our subscribers to fulfill their entertainment and connectivity needs. Other services integration such as gaming, OTT apps, TV everywhere, etc. will help make it a complete package deal for our consumers. This will not only help improve customer stickiness, thereby reaching the churn, but will also help us increase our ARPU and thus improve our margins. I will now hand over the call to Mr. Saurabh Banerjee, who will take you through the financial performance of the company.
Thank you, Mr. Piyush. Good evening to all participants. Let me take you through the quarterly results first. On a consolidated basis, revenue grew by 16% YOY to rupees 8148 million. Subscription revenue saw an increase of 14% YOY to rupees 3148 million. The broadband revenue stood at rupees 1308 million and registered a growth of 5% on a yearly basis. Operating EBITDA saw an increase of 12% YOY to rupees 1080 million, primarily led by higher growth in subscription income and ISP revenue. Consolidated EBITDA stood at rupees 1198 million, increasing by 8% YOY with an EBITDA margin of 14.7%. Net profit excluding other comprehensive income for Q4 FY24 stood at rupees 160 million. Now, on to the consolidated full year financial results. We reported revenue in excess of rupees 3,000 crores for the first time in the company's history. Revenue grew by 20% YOY to rupees 32,460 million. Subscription revenue saw an increase of 15% YOY to rupees 12,604 million. The broadband revenue stood at rupees 5268 million and registered a growth of 9% on a yearly basis. Operating EBITDA saw an increase of 6% YOY to rupees 4599 million. Consolidated EBITDA stood at rupees 5111 million with an EBITDA margin of 15.7%. Decrease in EBITDA and margin was primarily due to reduction in deferred activation revenue and decrease in non-operating income. Net profit excluding other comprehensive income for FY24 stood at rupees 1118 million. I would now request the moderator to open the floor for the Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Guneet Singh from Counter-Cyclical PMS. Please go ahead.
Hi, sir. Thank you for this opportunity. Am I audible?
Yeah, Guneet. Please go ahead.
Yes, so I would like to understand our revenues were in the range of 2,400 to 2,600 crores for the past couple of years. But right now we have seen quite a good growth in the revenues. So what is the main driver for this growth? Firstly, I would like to understand that. And secondly, even though our revenues have grown quite significantly, the operating margins have shrunk to all-time low levels. So, I mean, what is the reason for this fall in the operating margins, and what kind of steady-state margins should we expect going forward? And would we be able to regain the margins that we enjoyed previously?
Yeah, Guneet. Guneet, this year, if you see that CATV revenue has grown by around 15%, which is more than 100 crores, which has come into the copper. And ISP revenue has grown by around 9% in the overall. And because of this two good growth, you will see that there is a jump in the revenue side. Yes, on the margin side, if you say, as I always say that, look at the operating margin which I have given in my presentation. You will see that we are doing at 24% of operating margin, which is given in the presentation. which is net of what we pay to the broadcasters and net of one-time revenue and expenses. So we are maintaining that operating margin. It is in the range of 24 to 26%, which is going up from the last 5 years, if you see. And we are at the same rate which we are maintaining. So I would say that it will improve from here for the betterment.
All right, sir. And what kind of threat do we see from direct internet, I mean, non-wired broadband? For example, Jio or, Airtel, they are coming up with direct internet without the need for any wired connection. So don't we feel that even the cable TV and the wired broadband, they are threatened by such players, wherein people can directly view, the channels or TV through internet rather than getting these wired connections. So, what kind of threat do you perceive from these? And like you mentioned, that India has very low penetration in wired broadband and even direct cable TV. So probably, don't you think that this can be, this phase of just moving instead of in the direction of wired, this can be just replaced by going wireless through platforms like Jio or Airtel. So don't you think, that is a possibility, or what kind of threats do you perceive from this?
Guneet, you mentioned it right, that as I mentioned in my opening speech, that only 12% penetration is there in India, wherein if you talk about US market, it is already more than 70%. The Eurozone is already more than 65%. The China is at 55%. Korea and other countries are at 80% penetration of wired. Because the one thing we have to understand that wired is the consistency. If you require, then you have to go for the wired. Because in the wireless, you will not get the consistent broadband. You can say it is going up and down. The speeds are going up and down depending upon the number of people under the tower. But still, I will say still in the wired broadband side, India is at the startup mode. Every player is doing their bit. The telcos are also there. The independent players are also there. We can talk about SAP, Hathway, GTPL Hathway. All are there into this market, and everyone has the open market. It's a very big market right now. We are considering that somewhere the wired broadband from 38, 39 million will go to around 150 million in the next 5 to 7 years. So it's a big market for the gathering. So that's why we are not worried about the competition, as there is a lot of subscribers to take it.
All right, sir. Thank you for addressing my question. I'll join with you.
Thank you. A reminder to all the participants, if you wish to join the question queue, please press star and 1. The next question comes from the line of Ravi Patel, who's an individual investor. Please go ahead.
Good afternoon, sir, and congratulations. So my first question is that there seems to be a change in reporting of the fiber infra. Our leased fibers have more than doubled from around 6,500 kilometers to somewhere 16,000 kilometers, and no mention of underground fiber either. So is there some reconstitution in reporting or some strategic change where you want to focus more on leased equipment?
No, it's more of, if you see from 97,000, we have gone to 1 lakh plus on the owned one. And the leased one, as it was, you can say, reporting error where we are showing that 16,000 plus, which we have corrected this year. As in the last 2 years, we have gone for the lot of connections from Airtel and Jio on that, with the telcos. So there we did the correction in the reporting side. So these are the correct figures right now.
Okay, and so is my understanding correct that the rise in lease liabilities for the year is largely due to the rise in leased cables? And how much of increase in interest cost is split between debt repayments and interest on these liabilities?
Come again, can you repeat the question, please? Your voice was cracking.
Am I audible now?
Yeah, audible now. Yeah, please.
So, I just wanted an understanding, is my understanding correct when it comes to lease liabilities for the year? Is largely, for the year, the rise is due to the rise in leased cables, or like how much of the increase in interest cost is split between debt repayments and interest on lease liabilities?
Yeah. So
the finance cost, interest cost has two components, primarily two components are there. One is, of course, as you said, the debt cost, which is about, on an average, our debt cost is about 8.5%. Based on utilization of our limits, the debt cost may vary from quarter to quarter or from a reporting date to another reporting date. And there is an operating lease, so there's an accounting related entry which also is a part of the finance cost. So these are the two components. One is the real finance cost and one is the operating lease related accounting entry which is included in the finance cost. So these are the two components.
Okay, sir, got it. Thank you for the clarification, sir. Thank you for the opportunity.
Thank you.
Thank you. The next question is from the line of Anjali Mishra, who's an individual investor. Please go ahead.
Hello.
Hi Anjali, you are audible.
Hello. Yeah. Good evening, everyone. So my question is regarding project income and cost. So on a net basis between project income and cost, there seems barely any profit. So could you please guide me on the accounting of the same? And also, are we booking expenses we are yet to monetize? And also, because the previous guidance has shown 12 to 13% margin in the project. So I am currently only getting 2 million net on a 410 million cost.
Yeah. So this project, I think we have taken that in the quarter 3. So this project is granted by Gujarat ISP Private Limited, GISL, after tendering of rupees 46 crores, wherein the Gram Panchayat of 8,000 Gujarat villages under phase 1 and phase 2 of BharatNet project has to be made Wi-Fi enabled by supplying the materials and installation of the same at the Gram Panchayat premises. So this project is almost over, and we have taken the revenues in the last quarter, and cost also we have taken in the last quarter. Some of the revenues is still pending, which we will take in the next quarter, as this quarter we have not taken. And yes, the margin is going to be around 12% margin in this project.
Okay, and one more question.
Expenses have already been taken. Some of the revenues have still to be taken.
Okay. And one more question is regarding the growth in active subscribers in your TV division has stayed at the same level pretty much post Q4 FY24. So why has that been the case?
You are talking about whose subscriber, cable or broadband?
TV division. Active subscribers in your TV division.
CATV division.
Yes, TV division.
Yeah, so CATV division, if you see, active subscribers year to year, Y to Y has increased by around 550K, and paying has increased by around 600K. So there is an increase in the subscriber base, more than 500,000 in the year.
So did we see a lot of churn in H2 FY24 and there was less net addition to the subscriber base?
Yeah, churn is going to be there, as I explained in earlier calls also. But yes, I think we are doing the acquisitions and all, which is the churn is between 15% to 17%, varying here and there with the market. But yes, between 15 to 17% is the churn which is going on. But yes, we are doing the organic and inorganic both, and we are adding the numbers.
Okay. Thank you so much. Thank you for this opportunity.
Thank you.
Thank you. A request to all the participants, please restrict your questions not on speaker mode, but please use handsets while asking your question. The next question is from the line of Ketan Atavale from Robo Capital. Please go ahead.
Hello, sir. Thank you for the opportunity. I had two questions. Firstly, can you give guidance for next 2 years regarding revenue and margins? And secondly, when do we expect to reach 19 to 20% kind of margin on full revenue basis?
If you talk about the CAGR, we have given that we are growing up at the 17% of CAGR in the revenue side. And EBITDA growth is a bit down because earlier we were growing at 12 to 13%, now it is at 7 to 8% CAGR it is shown. But yes, as we go forward, there are plans to increase the revenue and reduce the cost. That's already we are doing that in FY25. So we are hopeful that in FY25, the operating margin we are talking about, it will again jump back to 26%, 27%. And there you will start seeing that there is a jump in the net profit also. So that's what we are doing right now and planning to do. That's the plan which we are taking care of in this FY25.
Okay, thank you.
Thank you. Participants, you may press star and 1 to join the question queue. The next question is from the line of Sanika from Sapphire Capital. Please go ahead.
Yeah, hi. Am I audible?
Yeah, Sanika. Please.
Yeah. So for quarter 4, we had given a guidance of 17% EBITDA margin. So I just want to understand why have we not been able to achieve it?
Yeah, so we did around 15% margin instead of 17%. That is because of two revenue which has gone down, which is one-time revenue. One is activation and one is other income, if you see. Both have gone down around 30 to 35 crores has gone down because of that. If we add that back, we will be at around 17.5%. In presentation, I have given the operational margin or operational EBITDA also just after the financials. If you see there, we are at 24% EBITDA margin right now, which is 1% down from the last year. But yeah, we are very, it is in the range of 24 to 26% only. And we are confident that we will get back to 25 to 26% next year.
Okay, so can we say that in the next year, which is this year, which is FY25, we will be able to do 20 to 21% kind of margin for the full year? And can we say quarter 1 we can get around 17 to 18% margin, which were like for quarter 4?
One thing which I'm always saying in the call that because we have to see the margins after netting the payment to broadcasters and revenue from the broadcaster. That's why you will get the proper EBITDA margin, the operational EBITDA margin, which we did as the operating margin. So that's why we have started giving the operational margin, which is, if you calculate it for the years, and we'll give you that, it is between the range of 24 to 26% throughout. So we are, as a business, we are maintaining that operating margin throughout. This is because the pay channel, or you can say the payment to broadcaster and the revenue from broadcaster, there it is a mismatch. And because of that, we are seeing that on the overall, we are seeing that the margin is going down because the contribution of marketing and placement revenue is lower than the main revenue of subscription and ISP revenue. And because of that, it is pulling down the margin. But you have to see it by netting what you are paying to the broadcaster and what you are getting from the broadcaster. If you net that, you will come to the real business margins. And that's what we are giving in the operational margin.
Okay. And next year, like we have guided before, a 20% growth. So in FY25 as well, we can expect 20% growth in our top line?
Yeah. If you talk about the operational margin, as I said, that it is going to be between 24% to 26%. We are trying to maintain that or increase that. So on operational side. In real margin, if you talk about, because it depends on that what we are getting it from the broadcaster and what we are paying to the broadcaster. Based on that, what contribution of pay channel or marketing and incentive revenues, placement revenues is going to be in the EBITDA. Based on that, your margin will go up and down. So we are not sure about that because we do the business on the net basis, do all these things on the net basis. So I'll say that if you follow the operational margin, that will be great for us as analysts.
Okay, and just one more question, which is on the depreciation side. We've done 337 crores of depreciation we've had in this year. So next year again, can we expect a 25-26 crore increase based on the capex guidance which you've given last year?
Yeah, this year is a bit exceptional, but next year also, because I have already told that we have to do some of the capex for maintaining the business as the churn has gone up from earlier 7 to 8% to now 15%. So that's why, before COVID it was 7 to 8%. After COVID it has gone up to 15%. So there you have to do some capex for maintaining the business, and those are adding into your depreciation, which is not contributing into the bank. So that's it will increase, but it will be not increase at that level, but it will increase.
Okay, and capex number is around 400 crores, right? Which is the annual maintenance capex?
Yeah, we are going to do between 350 to 400 crores this year.
Oh, sorry, can you repeat the number?
We were going to do capex of between 350 to 400 crores in FY25.
Okay. Thank you.
Thank you. The next question is from the line of Jaykant Kasturi from Way2 Wealth. Please go ahead.
Yeah. Hello, sir. Sir, I was going to your balance sheet. In terms of your borrowings, it has increased. Could you tell me the reason? Probably is it because of the project which you are doing right now, or it's due to any other reasons too?
Yeah, so you will see that there is an increase in the borrowing. This is mainly due to, you're right, due to the project, we have to give some margin money and we have to utilize our limits, the OD limits fully. And because of that, you will see there is an increase in the borrowing right
now. Sir, do you see it coming down by first half of this year?
Yeah, within FY25, it will be at the same level as it was in FY23. In FY24, it has been increased because of the projects, and because of that, we have to utilize our all ODs at the maximum level. We are expecting that it will come down in FY25 with the time.
Sir, and with regards to your trade receivables, primarily from the broadcasters' receivables, how do you see it?
Yeah. So its trade receivable is both your trade receivables and payables. It's almost both sides around 80% is the increase. That is 80% is from pay channels, from the broadcasters.
Okay, it's not particularly one broadcaster. These are included.
No, it's not particularly one broadcaster.
Yeah. Okay.
You have to receive money also from them. You have to pay them.
Yeah, that's true. Yeah. Sir, in terms of your looking about the activation cost, it has come down very significantly. Do you see it further coming down for this financial year also?
Yes, it will come down because see, activation is the deferred one, which like you get the activation and you have to defer it for 5 years. So this all you are saying that which is going down is a deferred revenue which is going down.
Okay.
So now we are doing the activation as we are taking activation and straight recharging into this year, that year only. And that's why I was saying that as non-cash one time, which you have used, and it has come down by around 16 crores this year. Next year also it will be come down by around 7 to 8 to 9 crores, which we have to see.
Okay, so thank you.
Thank you. The next question is from the line of Siddhant Shah from Corporate Database. Please go ahead.
Hi, sir. This is Siddhant here. Thank you for letting me ask the question.
Sir, I had a couple of questions. One, I think we completed the acquisition of Metrocast in this quarter, right? Does